Hello and welcome to Landy's Crypto Corner. Today is January 29th, 2025, and we're looking at Bitcoin yet again here on the daily, following up with where we left off on Monday's video. And Bitcoin, as you can see here, has attempted to set a daily low on a close. We have confirmed this swing low down here. Let's go ahead and get some of our drawing tools up. All right, so we have the daily swing low at 97,715. That is set as it stands right now with the Wednesday candle closure. Now, of course, the Thursday candle and session is open right now, but we have not yet seen a daily low set on a closing basis. So setting the actual close open here, which is coming in at 101,275. Now, in order for that to be solidified as a daily closing low, we do need to see price close above the Tuesday high at 103,770. Now, we did get fairly close, but not quite. We ended up at 103,747.25. If we do see the Thursday or Friday candle close above the 103,770, that would set this as another higher low on a close. Now it is ever so slightly a higher low on a close. You can see that this closing higher low over here is 102,211, and this would be a closing higher low at 101,275. So just slightly, but there is a lower low swing in place here, but this could be considered a deviation if we do start to see Bitcoin closing back above the high side structure over here, in particular somewhere around the 107,300 area or so between these two swing highs. Then, of course, I would be looking up to the prior all-time high. We're looking essentially, we're already hitting into this zone here at 106 to 108. Anywhere above there, we're looking for the all-time high again at 109,358 and higher. Now, if Bitcoin does lose this closing low side structure, but remain in the wicks, then it would be a lower high, lower low close with another lower high somewhere in here, depending on where this closes. Essentially, Bitcoin really just needs to hold this low down here because it really wouldn't do much in terms of structure. Yes, we would get a little bit of a structure shift. We do have a lower high confirmed, but then another higher low as it stands right now. If there was another lower high, lower low, we just have to watch this 97,715. Then, of course, below there, we also have, or right at that low, essentially, we have 97,900 by the lower first standard deviation of the Bollinger Band set here. Anywhere below there, from a volatility standpoint, we're starting to look down to 94,300 or so. But we actually have some support areas in between. So let's go ahead and pull up our local support and resistance chart, or you could just call it areas of interest chart to the upside and downside. I have made an ever so slight refinement to this chart. The red zone down here is the bottom side main support structure and zone of interest. We have a yellow zone kind of nearing the midline between this overhead zone, which is now yellow, used to be green, and the red zone here. This is coming in around the $95,000 to $96,000 level. It's technically 95,862 to 96,150 or so right here. And that kind of falls in between no man's land, and that is an area that if we saw price start to get below the lower first, I would look essentially around $95,000 to $96,000. Anywhere below there, we could entertain a swing down to that lower second, and he closes below there, and we're looking for expansion of Bollinger Bands into and price action into the support structure, $92,000, and possibly endangering this lower low of the range down here of the most recent downtrend with the deviation high coming in at 89. Now there is a bottom side support there with this low on a wick basis rather. Coming in right at a major fib level at the 1.168 at 88,700. Anywhere below there, well, danger, danger, danger on the daily because $85,000 kind of lie in the sand to prevent from price from kind of falling further. And yes, there is some order block structure over here. You could take like 87.3, but just very, very careful. It would get expansion basically through the main area of support down here, and we've seen this top side area around $92,000 get pretty consistently closed above. Yes, we have had swings into it or wicks into this zone, but around 92 right here, we've seen this tested repeatedly over here on this low. We had the swing low from the 5th, this big candle that basically hit around 92 and a half to the downside, and or $92,000 rather to the downside here, and 104 to the upside. Of course, we had 1, 2, 3, 4, 5 tests in there since then, holding up quite well, even rallying out to the top side. This was the prior green zone for the main overhead resistance, but now that we've seen some price action here start to hold this area as support, I've colored the zone yellow, and we have the green zone above here as the all-time high, or the prior all-time high in a close and a swing. 106 to 108, essentially it's 108.388 here. So anywhere above there, green means go, would put it above the upper second as well, running that high. And again, above the all-time high, I would take it in $2,000 chunks as zones of interest until we got to 112. So 106 to 108 right here in the green zone, anywhere above there, looking 108 to essentially 110, which would be slightly above the all-time high now, then 110 to 112. Anywhere above there, we're looking at 112 to 115, then taking it in $5,000 chunks, 115 to 120, 120 to 125, 125 to 130. Now, I've shown many times how that lines up with some of the more macro fib structures. We will get into that in just a moment and take a look at the monthly, because we do have the monthly closing with the Friday candle. And I won't be recording that video on Friday until after the close. So we'll talk about that in just a moment. But one of the big things here is, Bitcoin trading above $104,000, the December 5th high over here. We're looking to the upper first. Anywhere above the upper first, even in lower term timeframes, I would look to 106, the close open high over here that matches the most recent close open high here. Essentially, it's not exact, but this is at 105 or so, 105, 100. So I would be looking for another $1,000 up to the bottom side of this resistance area. And then anywhere above there, then I start looking to the 108 region, possibly above to that upper second, and then the all-time high and higher. You can see that the upper third is up there at 112 or just over 112 at 112.290. Again, we're dealing with very large ranges for volatility here, especially with the volatility spread of the Bollinger Band still. And you might remember that I was talking about, even if Bitcoin does set a low here, I think it's going to take a little bit to work itself out, right? Got a beautiful close open right at this 101, 175, which is essentially, this support area is right off of this this daily structural high, and then the kind of pit stop in here before regaining and moving up to make a new all-time high. And Bitcoin's been holding that pretty perfectly on a close open basis. Even had a perfect wick down when setting this high, and that was coming in at that 101, 200, kind of $25 front run of that area. We also have the basis band here, so very important to hold around $100 and $1,000 for the Bitcoin bulls. Otherwise, the bears are probably going to run the most recent low and try for lower. Now, when looking at a few other things here, we are starting to see that today, this is not confirmed because this low on the indicator, it will blink on and off depending on where price is today. Essentially, if we see a close above, like I said, around a 103,770, you can even take just 104. That would set the closing low. So far, we do, with this green candle on Wednesday, we do have the swing low solidified. We just need to see the closing low confirmation. We have, let's see, do we have anything interesting here going on with RSI? Not really that's relevant. So this trend is just trying to, in terms of higher lows, is trying to keep itself up on the close. Maybe a little bit of a deviation down there. Now, 106,731 would turn stochastic momentum back to the upside here. There is a bit of trendline regression going on. Now, for those that are new here, this is not a Stoch RSI. This is a regular Stoch. So Stoch RSI measures the velocity of RSI, and we just looked at RSI. So we don't need another indicator to kind of gauge RSI, but instead this measures close over close price momentum. Now there is a bit of a trend line regression going on here. And that's the only place you're going to see me use trend lines. So sorry for everyone that wants me to use trend lines. I don't play that game. I'm into horizontal support and resistance and volatility levels of interest as it relates to them and tracking the trend, right? And then we have trend, support and resistance, volatility, and then momentum, which the first three actually create momentum, right? Your trend, support and resistance, and volatility. And we don't put more weight on any of them than the other. I mean, everything kind of derives from trend anyway, but it's all about the confluences. And right now we need to see closes back above 106,731 to turn Stoch back to the upside. That would put Bitcoin, right in the green zone here, essentially, at where the 106, 136 closes are coming in and pushing these highs up here around 107, right? Then we'd start to see the momentum indicator begin to turn, the regular Stoch in this case. If you're interested, there is free versions of a Stoch that comes with the pivots. I actually have both of them on at this moment. This is a paid indicator by one of the developers over there that Eric Crown works with of Crown's Crypto Cave. KVDB made this one. It's called the Advanced Stoch. It just has extra bells and whistles. There is free indicators that have pivot momentum pivots in them. There's the one here that is free. You can search it in the indicators tab up here. It's called the BA Pig. You do have to type out Pig, reverse Stoch, and it's the panel version so that it's in its own panel and not just on the price chart for you. All right, let's go ahead and move up. Well, actually, no. We're going to move down to the 12-hour because the 12-hour is a good early indicator through each 12-hour close, and the daily candle is there's two of which way we can kind of get the buys for momentum. We can see that the 12-hour has set a closing higher low, and it is coming on bullish divergence. It is currently trading above the support resistance zone of interest and that 1272 Fibonacci level from the extensions from the high to the low in the bear market. So previous cycle high at 69 to the low at 15.5 in 2022 for the bear market. Well, we have some compression here going on. What we would see on the 12 hours, if we did start to see Bitcoin trading above 106, keep an eye on where that upper second is at just shy of 107 there at 106,844. Anywhere above there, we would get expansion right back into the highs, right at the prior all-time high here at 108, 388, and then likely up to where you can see the upper third is coming, but then likely up to that 109, 358, 109.5, maybe even 110, right? We're taking it $2,000 at a time up there. If it does start to close above that, you'll see the 12-hour kickoff, really good expansion to the upside that we would be looking for, of course, to follow through on the daily chart. And in this case, we have the bullish divergence, and you'll note that here on the 12-hour, of course, it's not going to be we don't need the trend line there for trend line regression, but so you can ignore that because that is from the daily. But we do see stochastic momentum pointed to the upside on closes above essentially $101,000. It's 100,878 right now. All right, so just wanted to kind of give that little tidbit. You can get an early indicator of kind of where the daily is going to close based on the 12-hour structure here. And it's good to check, midday or mid-session, see what this most recent or this open 12-hour candle, where this kind of closes at, and then we can, watch the last 12 hours of the session and see how it goes leading into that daily close. So let's go ahead and take a look at the weekly. And no, we don't need the weekly. We're going to look at the weekly on Friday. We need to look at the monthly here because we do have a monthly close. And one of the big things that I've mentioned quite often here for Bitcoin is that we can get rid of the local support resistance stuff. Let's go ahead and just take a look at its Bollinger Band setup. So obviously we have a bullish uptrending structure. We've got the lower high, the higher low, the higher high, a higher low here, so we have full trend to the upside here. And what bulls need to see for expansion on the monthly is we need to see closes. Now we are getting expansion, right? But the actual expansion of price volatility as it relates to the bands after putting in this last higher low structure after the essentially 6-month grind sideways and down to put in the $49,000 higher low over here. Well, we saw that we got some price compression, obviously, and a price cool down and a bit of mean reversion here on the monthly that kind of stifled the hyper expansive posture that Bitcoin was in, causing a BBWP cool down. Now it is still green, but we need to see closes above the upper second to really kick off another bit of confirmed volatility expansion, in this case to the upside, right? And that would be on closes above 102.867. So this is where we want to see price close above 102.867. You can just call it 102.9 by Friday. That would look really good because we're going to get another tick. We're coming from January into February. We're going to see this indicator update for volatility levels of interest. Currently, you can see that upper third is right there, right above $125,000, which is quite interesting because I think this is going to update. If we pull the bear market with fib extensions on, we can see that above the 1272, which is just 27.2% above $69,000 when taking this pull of the fib. This is at 103,645. Right around that 104 top side of our local support resistance zone that we had drawn out on the daily. But we see this is where the upper second is essentially around here, right? We do need to see Bitcoin close basically above 103 would look really good. And then we can start to entertain a move up to somewhere around the 1414. And you can see that the upper third is there, a little bit over $125,000. But as volatility increases on the lower term timeframes like the weekly and daily and stuff like that, then, the 1414 is the next logical place. And I would call it, take it above 112. We go to 115, 115 to 120 is kind of the zone of interest. And then 120 to 125 as kind of noted on some other bands that I've shown you before. In prior editions of my my TA takes here, we're looking for 125 to 130. That puts it around the 1414. We also have confluence with the upper third standard deviation, which is likely going to update and be around 130, maybe even higher than that. And that's what we need to be aware of. And we do want to see expansion kicking off on a monthly time frame. Again, we're getting early indications closing here are higher that we will see re-expansion on the monthly time frame. Let's go check the charted version of BBWP, which is not built into the indicator that I share with you guys and gals. It is a free indicator by Caretaker. He allowed me to pilfer that code for my indicator that you can find in the bit.ly link in my profile description on X, or in the video link description down below. And I think I said that wrong. But either way, this would kick off a bit of re-expansion after a little bit of consolidation and price action again. As it relates to the bands, that would be a more volatile, expansive move to the upside. And we would then need to see, if we do get volatility expansion, we need to see one more closure for confirmation of that volatility expansion on the monthly time frame from February into March. And again, I've been saying this for a while. Everywhere I go, I say, what we're watching now is the first quarter to second quarter transition in markets, which is going to be, price action is going to be responding to what this administration is doing, right? And the current administration has been very pro-crypto so far. We've seen some executive orders signed. We've seen some people being placed into positions of importance in the SEC and CFTC that are crypto friendly and want to create a bit of a regulatory sandbox for experimentation in before really nailing down what they want to see and refining what they want to see as actual regulatory structure for this market and these new emerging markets. But we're also seeing Cynthia Lummis get placed as the digital asset head of the banking subcommittee of the finance committee there. We've got Jerome Powell just came out today. By the way, there was no rate changes. We all figured that he wasn't going to do anything with rates, but he took a very crypto positive, or he made very crypto positive statements while trying to remain neutral. But essentially saying, with SAB 121 gone now, which is something that he indicated that he wanted because he wants to allow for working with the industry. That also means that if banks can hold crypto on the asset side, not the liability side, which is what the SAB 121 was making them do, they'll allow them to work with businesses and custody crypto and all kinds of stuff, even offering products through the bank, which is actually advantageous because if you're a crypto company or you're someone who wants to have crypto in your bank and have them help you manage it, you get FDIC insurance. So insurance is a big thing that we don't talk about in crypto. So there are some specialty carriers out there if you're a high net worth individual, but you end up paying through the nose. But yeah, that's going to be it for today. I will see you again on Friday for the kind of wrap up, right? The Friday wrap up. We'll talk about where the monthly closes. We'll talk about what to look for in this coming weekly close, as well as there are a few things that we want to see kind of come to fruition. We've got some interesting things happening here on the weekly where we do have a potential higher low structure forming here that we want to see confirmed. We definitely have it on a swing and it is locked in at 89 there, but we need to see the actual closing higher low start to solidify here. Hopefully we see that by the end of the week if you're bullish. And if you're bearish, you want to see you don't want to see this closing anywhere here or higher. That's for sure, because then that takes a lower high close, not a lower high and a swing, but a lower high close off the board for you, which just spells more consolidation. Although this is making for some nice range trade opportunities if you are a leverage trader, and you also are you know how to short, you know how to long, that kind of stuff. Obviously, be very, very careful. Be very careful with leverage, all that good stuff. And I'm going to leave it there. I'll see you on Friday. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And Landy out. Take care.